Good morning, everyone, and welcome to Morning Markets from True Potential. Today I wanted just to reflect back on how asset markets performed last week and then look to the week ahead, which will be important from a number of aspects. So just looking at last week, we had weaker equity markets, marginally weaker over the course of the week, looking at the S&P 500 down around 3% over last week. Similar features into sovereign bond markets. We saw yields rise a little bit here in the UK, unchanged in the US. The other factor that I thought was worth touching on from last week was just the movement that we saw in the oil price, with West Texas Intermediate down around 10% over the course of the week. And that really is, I think, notable in the sense that we've taken that oil price back to levels where it was before Russia's invasion of the Ukraine. And that's very important when we think about the headlines that we've been used to around energy prices, high oil prices, etc. And certainly those like myself going to the petrol pump, you will have seen that fall in the oil price and strength in sterling reflected in the price of petrol and diesel at the moment. I think the other thing really impacting the oil price at the moment has been concerns about the outlook for economic activity as we look into 2023, and also the relatively slow reopening of China. China, a very significant oil demand market, and that demand not being really as strong as had been expected. I think then looking to the week ahead, a very important week for asset markets with a number of those factors that have been really crucial to how equities and bonds and indeed currencies have performed over the course of this year very much in focus. We get the final CPI reading, so Consumer Price Index reading in the US on Tuesday. Within that, I think really the focus will be much more on what's happening at the core level, excluding the food and energy, those more volatile items, but also what's happening with services inflation, that being one of the key drivers of what we're seeing in wage inflation as well. So that will be the focus there. We'll then move into Wednesday. We'll have the Federal Reserve's final interest rate setting meeting of the year. Over the past number of meetings, we've seen interest rates increase by 0.75%, some of the sharpest and most significant rises that we've seen really in the history of the Federal Reserve. But then looking to this meeting, there is an expectation that we'll see a 0.5% increase in interest rates in the US. We'll also get a set of economic projections, which will give us a sense as to how those voting members and members of the Federal Reserve are thinking about the outlook for inflation, the peak in US interest rates, etc. So that will certainly be a great focus for the market on Wednesday. We'll then move into Thursday, and we'll have the final meetings as well from the ECB and also the Bank of England. In both cases, I think 0.5% increase is expected as well. Those will certainly set the tone for asset markets this week. Just looking at this morning, we've had UK GDP for the month of October showing an expansion month on month from September, but do remember the September number was certainly impacted by the additional bank holiday that was taken in September. More pertinent, I suppose, is what's happening on a 3-month basis and looking at it on a year-on-year basis, and we can see there that GDP contracted around 0.3%. I'll leave it there, but please do join us for the rest of the week when we'll be looking at those key interest rate meetings and inflation reading from the US. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.